Setting up the webinar now. There we go. Perfect, perfect, perfect. Let me post that here. Let me post that here. And we are live. Wow, this is my favorite part of the morning. All right, let's get the screen share here. Omar, good morning to you. Let me share my screen here. And we are good to go. We got Omar, we got CJ, we got Wayne, we got Ricky, we got Robert, Zen Master's in the house, JB's in the house, Ivano, Rich. How are you? How's everybody doing this morning? I've got a great show for you today. Got a lot to talk about. Cam is in the house. I haven't been able to log into Thinkorswim this morning yet, Cam, but Matt said reset my cache yesterday and it worked fine the entire day. Hopefully today he'll do the same. Gary, good morning. Robert, good morning. Peter, good morning. Timothy, another Robert. Brian, good morning. Jacques, Robert, Ward, Fred, Dave, Richard, Pat, Chris. Good morning, good morning, good morning. George, Allen. By the way, folks, remember, customer service live from 10 a.m. to 1 p.m. every single day. Helicopter Gal's in here. I've got a lot to talk to you guys about today. Well, I always have a lot to talk to you guys about today, but boy, oh boy, I got a lot to talk to you about today. Henry's in the house. Usually I say, let's wait till we have 100 people, but we already have 121 in this room. And again, thank you for making Monday our record. I think we had 437 people in the house. What is the strategy with the Apple trade? Peter, what Apple trade are you talking about? Can you be more specific, Peter? War Dog is in the house. Yeah, Peter, what Apple trade are you talking about? Let's see what Peter says. All right, you guys should be able to see my screen right now. And you guys, Tony, I did yesterday also, customer service. Good, good, good. I'm glad you had customer service live. All right, now before we begin, remember something. I'm sharing my number one stock that tanked. It's happening at 1 p.m. today. It's a strategy that's had a 91 point plus win rate. I don't want you guys to miss out. I want you guys to get it. Peter, what class was that in, the strangle that you're talking about? Was it here? Did it have anything to do with what we're doing right now? I thought I gave that in a private Telegram channel, in a private room called the Trading Pit, where we don't talk about trades till they're closed. No, he's talking about the strangle. That's why I wanted to make sure. Remember, guys, you got to watch me. I'm Socratic. I don't ask questions I don't know the answer to very often. Stop talking about things that happen in another room in this room. That's what I'm trying to say. Right, Peter. Let's save that for the pit. Remember my rule. We don't talk about trades that we put in other programs here or anywhere else till those trades are closed. All right. Just want to make sure we're all on the same page, because it's not fair for people in the pit, Peter. People, they paid for good money for that. Exactly. Thank you, Tony the Tiger. I just wanted to make sure we're all on the same page. All right, guys. So I wanted to, before I get into the market, I wanted to show you something that I'm seeing right now that I'm not liking. Okay, I'm not liking. So as I was going through my scans yesterday, and I'm just going to use a random scan. I want to show you guys something. I was looking at stocks, and I was looking at the 90-day 90-day breakouts and 90-day breakdowns. And one of the things that I've noticed there's 95 and 100, which is like right at the tethering point. But then when I looked, at the actual stocks, noticed what I saw. This is an ETF, so this doesn't count. That's an ETF, that doesn't count. That's an ETF. That doesn't count. Good morning, Carrie. Let me continue with this. ETF doesn't count. ETF doesn't count. ETF doesn't count. I think you're starting to see the point, not the point, but you're starting to see here. ETF doesn't count. ETF doesn't count. ETF doesn't count. The point is about 30%. Here's the point I'm making. About 30% of all the assets that are breaking out right now are just various ETFs, large cap ETFs. So then I started saying, wait a minute, this is not good. That means even though this number is very low, it's being distorted because most of what's breaking out are ETFs. So Uncle Roger dug deeper. So I said, you know what? Because it didn't seem to me for a while there, because maybe I focused too much in the market. And folks, you're not going to get this from Kramer. Pay attention and listen good. I specifically wanted to do this segment later on and make a report, but I said, you know what? I'm just going to give it to you guys here this morning. So pay attention. Pay attention. Duzzy, your question will be answered in about 30 seconds. So I said, wait a minute, what the hell is going on here? Why is this happening? So I said, you know what? Could it be that all of the movement, literally all of the movement in the market is being caused by FANG stocks right now? I said, no, it can't be. But then I went to my trusty handy dandy equal weighted SPY. And when I went to the equal weighted SPY, I was shocked. Actually, I wasn't shocked. I just wanted a confirmation. I'm just saying that for shock value. I wasn't shocked at all. I was expecting this, but I'm very, very negatively surprised. And then to confirm this, because you know me, I don't believe anything when I see it. I want a confirmation. I went here, and this confirmed what I thought. Folks, look at how many stocks are trading above the 50-day moving average. Look at the real stock market. Now, I want you guys to see something right here. Look at this. Look at this. Look at this right here. Well, here, let me give you a better view. Here. Let me give you something without those stupid lines. How about this? Oh, Eagle Beagle. How you doing? How you doing, Adam? Eagle Beagle. I don't think I'm right. I know I'm right. Let me show you. This is the stock market right here. This is the S&P 500 E-minis, right? How does this look to you? It looks like it's at a new high. It looks amazing, actually. This thing looks like it on a 10 out of 10, it doesn't look like it could be looking any better. But what happens when we take out the Google, and what happens when we take out the Microsoft, and what happens when we take out the Apple, and what happens when we take out those NVIDIA? That's all. Just bring them all to fair value, equal value. Make everything equal value. Oops, sorry, wrong ticker symbol. Here. Here's what it looks like. Good morning, Sandeep. Here's what it looks like. So let me show you the two different scenarios, okay? And if this doesn't make you upset, I don't know what will. So this is the RSP. Good morning, Rochelle. Rochelle, you don't want to miss this. This is really important. I'm explaining how there's a big fraud in the market and how the market is trying to sucker you guys in right now unwillingly. So this is what you're seeing. This is what you're trading. This is what you're seeing. This is what you're trading. Do you guys see a difference? Here. This is the equal weighted SPY. We're literally at the 100-day moving average. We're below all the major, we're right at fair value. We're literally at fair value right now. Okay. And look at this. Looks like it's making new highs and the world is perfect and there's nothing to be worried about. Yeah. So, you watch CNBC. Ooh, we're making new highs. We're half a point from new highs. The market is at new highs. And it's driving you, driving you, driving you. But when you really look at it, this is what it looks like. Do you see why it's been really tough to do anything the last 2 weeks? Look, this is what we've been dealing with. We're doing nothing right now. This is the market. When you look at the nice commercial ad, the nice shiny commercial ad with the pretty people and the nice looking color pages, you're seeing this. But when you talk to Uncle Roger and you want to see reality, this is the reality. Now, I'm going to show you something interesting. So this is the equal weighted SPY, right? How about this? Look at this. Look at the Dow Jones now, the regular Dow Jones, which doesn't have all those big cap stocks. How does this look to this? They look identical. I know it has all that crap on there. If you want, I could take it off and I could just put on the futures, but I just wanted to show you. That's a good point, Susan. I haven't watched it in over 15 years. The last time I watched CNBC was when that funny guy Mark Haim died. I used to watch it when he was alive. I think that was 15 to 17 years ago. I used to turn it on before going to work for half an hour. So do you guys see we're right near the 100-day? We're near the all-time highs were made way here. Look at the spot. Folks, the all-time high in the stock market was made in March. In March. This is what you're trading. This is the U.S. stock market. It's going nowhere. It's not going up. It's not going down. Good morning, Terrence. It's doing nothing. It's doing nothing. And it's not looking all that great. And it's hovering right at the 100-day moving average. It's right between the 50, the 100, the quarter, and the year-to-date VWAP and all that stuff. It's all there. Here, let me just make sure. Actually, it's not. Hold on. Let me just put this here. Here it is. Here's the quarter-to-date VWAP. The year-to-date VWAP is right here, and we're right there. We're just doing nothing. Nothing. So I wanted you guys to see the real state of the stock market, and this is another reason why I've been telling you, hey, we're not really seeing anything going up or down. We're just kind of stuck right now. And that's the reason why. So, hey, Karen, how are you? That's the reason why. So don't believe the BS that you're hearing right now, how stocks are making new highs, how the economy's doing. It's not. If you take away all that crap, this is what you're left with. So sorry I took so long, but I thought it was very important for me to explain this to you. Okay? All right. And I hope you guys understand that and see that we're not really bearish, but we're not really bullish. We're kind of doing nothing right now. I mean, we're just this. And if you don't want to look at this, just look at the Dow Jones. It'll give you the exact same representation of the market. I don't have the equal weighted QQQ, but I could tell you that it's not. Henry, that's a great question. So here's what I did. S&P 500. Actually, Henry, I've got even worse news for you. Let me show you something, guys. Thank you, Henry, for bringing that up. I did ask myself that question too. Fair question. So look at the S&P 500, 45%, right? Which puts us right here, which is where I said we should be. Now, look at this, Henry. The S&P 100, this is including, now listen to this, including the Apple and the Microsoft and all those stocks, because most stocks are lower, only 55. But look at the NASDAQ composite, Henry, because this really will tell you the bigger picture. This will overshadow the NVIDIA and the Apple and the Google and the Meta. Okay. Yes, it is. The report is in 15 minutes. We're about to get into it, but this is really important. Don't you guys want me to talk about like the most important things here? Or do you want me to talk about things that everybody's going to be talking about? So Henry, look at the NASDAQ composite, 42%, 42%. So your answer is, what do you think? 45%? 42%, 55%, and that's including all those uppity stocks. So if you take those stocks away, remember, there's only 100 stocks in the NASDAQ 100. And I can count right now 5 that are doing the whole distorting. So if you take that away, this is what you're going to get. And let me tell you, if you take the market cap away, it's even going to be worse than this. It's probably going to be about 35%. So this is really important. This is really important. This is really important. I don't know what you guys think is important. And I've got plenty of time to talk about the CPI. This is important stuff that you're not going to find anywhere. Nobody's talking. Who's talking about this? Nobody. All right. So again, the market is not nearly as uppity as oh, okay, good, Henry. I like the FinFizz heat map. I like the FinFizz. I like FinFizz quite a bit, actually. If there was no stock fetcher, I would be using FinFizz. Hey, let me ask you a question, Henry. Maybe you guys can answer this question for me. Is the heat map on FinViz, is it live or is it like 10 minutes delayed? Or does it depend on whether you pay for the premium or not? I've always been curious about that. If you guys can answer that question for me, let me know, okay? All right, so let's talk about the broad market. So as you guys can see, there's really not much going on before the CPI report. There's really not, which makes perfect sense. There wouldn't be a lot before the CPI report. Now, few things we need to pay very close attention to, and this is not good. How do you know you get a strong bear market when no one is selling? That's something I can't really get into right now, Eagle Beagle, but I will today in the VIP room if you asked. Yeah, I thought it was delayed. But anyway, let me show you. So if you guys know if FinViz is delayed or not, 15-minute delayed, what about if you pay FinViz? Is it free? Do you get real time? So anyway, let me know. Just let me know. I'm honestly just curious because I'm thinking of subscribing to it because I like FinViz. And why not? I have everything else, right? I have StockFetcher, bar chart. I might as well have FinViz too. But actually, I like FinViz. I play around with it sometimes. And actually, every time I play around with it, I really like it. So if anybody knows if they're delayed or not, let me know. That is very much correct, Mark. Very correct statement. So again, the market's flat, but what's getting me really hot and bothered? Let me show you. Let me show you what's getting me really hot and bothered. George, the ADP report is history. The ADP report has already been passed by the employment report last Friday, which basically told us that the ADP report was BS. And the actual report confirmed that employment is solid. And today we're going to find out how solid it is, and we're going to get the Fed conference. So no, it's thank you, Curious Cat. I appreciate that. I figured it would be if you're paying for it. So we're looking for these numbers. We're looking for the X in food and energy to be below 3.6. The report is coming in 12 minutes. And for year-to-year CPI to be 3.4. If this number is 3.5, oy vey. If this number is 3.7 or even 3.6, it's not going to be good. All right. Hello, Infinite League. Hello, Curious Cat. All right. So here's what's bothering me. What's bothering me is the bond market. Now, is it really bothering me? Not really, but I'll tell you what's concerning me. Notice how we fell off the cliff when we had Friday's employment report. Hey, PM, right? We fell off the cliff. This report told us that basically that employment is solid and everything is kosher and everything is copacetic, right? Well, look what the bond market did yesterday in ahead of the report. Gotcha. I thought so, Penny. Thank you. I just wanted to make sure. I figured they wouldn't give you free heat map, free real-time heat map for free. And anyway, I just wanted to know. Thank you. I appreciate that. All right. So this is telling me, and this right here is telling me that either somebody got a good whisper of the CPI report or the CPI report is going to backtrack what the employment report said, which means things are getting a lot worse. Because the only reason this would rally like this if things are getting worse, if inflation is way stickier. Because what this would imply is lower interest rate. And the only reason we would have lower interest rate is if this report came out really bad. Because then the Fed will say, hey, things are not doing well. We're not making any progress. But employment is still very strong. So we're going to thank you, Thomas. So we're going to keep rates steady. If employment was getting weaker and inflation was getting weaker, we would do something with employment. So I don't know if somebody leaked something yesterday and this morning, but look, ahead of the report, and it's not like yesterday we had anything happen. See that? So I'm suspicious that some negative data got leaked ahead, because this thing completely erased. Look, it not completely, but it almost erased everything that happened. Look, this is the announcement that employment is solid, meaning the kid's not getting his bike, right? And then look, yesterday, the hope for the kid to get his bike comes back. Yeah, what Sylvain just said, exactly what Sylvain just said, that there's hope he's going to get that damn bike. So again, maybe there's a leak, but based on what I'm seeing in the bond market, I'm going to assume that this data, I'm going to make an assumption that this data is going to be worse than expected, and that this will be 3.5, 3.6, and this will be 3.6, because otherwise I don't see why the bond market would rally so hard this morning and yesterday. All right. So again, just putting things out there. All right, let's talk about the broad market. And again, folks, it's very, very difficult to determine what's really happening with the market when you're seeing this. And you might have noticed I haven't really been doing less trades in the pit, but maybe I'm calling out a little bit less, but it's because of this. It's hard to get over this. We're not having any momentum. And again, I keep seeing NVIDIA, I keep seeing Apple and Google, and I keep trading those stocks, but there's more to the market than those stocks. I don't know if I agree with you on that infinitely. This is a guy who's a Momo trader. Infinitely, I don't know. I like futures are not that slow, and I like to get things in real time. Anyway, except pre-open, then I don't care. But anyway, let's be careful. Let's be careful of what to expect, because the bond market, for some reason, the bond market is getting really uppity. And the only reason the bond market would do this is if there's something coming out that would spell that inflation is not doing as well as they expected. Okay. And again, that report's going to come out in about 8 minutes, and we'll get it. As far as earnings today, we had Oracle. I think Oracle came out with a really good number. We have AVGO. This is a big chip stock, and this will reflect on the chip sector. And then tomorrow we have Adobe. Okay. And we have the employment report, and that's going to be the biggest. That's going to end the earnings cycle, and I'll be able to tell you exactly what the full repercussions are. Gold. If the economy slows down and if the numbers are really weak today, that would make sense for gold to start coming back. If you remember, I drew this line a while back, and I told you that there's a lot of value here and there's a lot of support. What we need to see now is we need to see how gold, and this is the futures, okay? We need to see how gold is going, whether gold is going to hit the 50-day moving average. For it to hit the 50-day moving average, it has to overcome the 8-day moving average, the year-to-date VWAP, and the quarter-to-date VWAP. There is a lot of resistance here, and if we can overcome this resistance, there's a good chance we're going to start going higher. Until I see us break the 2407 area, I'm going to stay neutral on gold. If we break the $2,300 an ounce level, I'm going to start getting bearish on gold. So this right here, this area right here is going to determine whether I start buying gold stocks or selling gold stocks. Again, that area is about 2408, 2407. And on the low end, that area is 20. So basically 2400 on the upside and 2300 to the downside. Okay. Those are my levels. And right now, as you can see, we're literally pinched between the 100-day, the 50-day, and we have a lot of value here, but we are below all averages. Yeah, Oracle is up. It's helping the market. So what about the energy market? Well, the energy market's been really moving. A lot. And now we are literally at that level that I talked about. The only level we need to go above right now would be the 50-day moving average. We're above the 200-day. We're above the 8-day. We're above that line that I drew right here. And we're literally coming to two very important levels where we're at right now. We're at the quarter-to-date VWAP and we're at the year-to-date VWAP. We need to overcome these levels and go above. Yes, good head and shoulders on gold. I noticed that yesterday as well. I think I actually even mentioned it to you guys. But we need to get above this level. That's 80.70. What I'd like to see is get above the 50-day moving average. If we can get back above the 50-day moving average, we could see some upside. Be careful. Both metals are below the VWAPs, and gold is right at the gold is right below the VWAP, and energies are right at the VWAP. Okay. So, and yes, there is a head and shoulders on gold, which I mentioned yesterday. So be careful. This is the neckline right here. And if we break this neckline, we'll go down. Again, I don't know if that'll happen. And if it will, we could just kind of consolidate here for a while too. So it's not necessary that it'll happen immediately. All right. So those are the metals. Those are the energies. Now, what about volatility? Let me go to my VIX. Remember, the market hasn't done anything at all. The market is this. This is the market. It hasn't done anything. This is what the VIX follows. It doesn't understand fear based on market cap. It's just looking at the S&P as a whole. So what of volatility? As I mentioned, volatility is moving up. Volatility is now moving towards that 13 area danger zone. If we go above this level, and we will if the report is really crappy today, the next level is 1360, and then we have all these moving averages. We have the 100-day, the 50-day, the 200-day. So let's be mindful of volatility and whether it's going to break. The next key level is 1345. It's right now 1301. 1345 is the major level. Okay, is the major level. And again, I think we're going to see heightened volatility because we have the CPI today and we have the PPI. And by the way, anybody who enrolled in my live class tomorrow at 2 p.m. Tomorrow at 2 p.m. I'm going live, and we're going to have an hour day trading session. I'll kind of try to put everything together. I wanted to pick a day where we're going to have volatility, but at the same time, all the big data is behind us. Okay. So no guarantees. I don't know what will happen, but 2 p.m. tomorrow. And remember, I'm sharing my number one stock, the tank, that I think will rebound. And this is from a program that's had 10 winners in a row. And to be honest with you, if I didn't have one loser, it would be 12 winners in a row. But things happen. So don't miss out. That's happening at noon at 1 p.m. And we have the CPI coming out in less than 2 minutes. All right, let's talk about the stock market. So you guys understand everything is very fragmented right now. The large caps are completely destroying this market. This is really what the market's looking like. And if I were you, I encourage everybody to remember this ticker symbol, RSP, and keep an eye on it because we literally bounced off the 100-day moving average yesterday. So that's really, really important. Okay. Now, what about the actual stock market? All right. Well, as far as the stock market, and I showed you this morning, if you look at the 90-day lows, you'll have plenty of lows. There's 100 lows, and I couldn't find any difficulty finding stocks to the short side. It is a very clear two-sided market. All right. This is why, Cam, I don't trade earnings, because you don't have any foreseeability. You don't have any foreseeability. Fred, I think the one you paid for is real time, not the Thinkorswim. Yes. That's why I used the Thinkorswim one. Yes. Okay, so I didn't have any problems finding shorts. There's plenty of momentum to the downside. It may not be great momentum because it's summer, and whether you're trading to the upside or downside, you're dealing with this, and you're dealing with very little volume. I mean, let me just give you an idea. Volume is just crap here. Look at volume yesterday. 36 million contracts. 36 million contracts. Average daily volume is 73. So volume is like half of what half of typical volume. While the stock market is making all-time highs on half the volume, where the rest of the market is looking like this. I mean, if that's not a red flag, folks, if that's not a red flag, I don't know what is. Because the volume is much more coinciding with the market doing this. And those five stocks are not going to distort market volume. Okay. All right. CPI, give me the number. Give me the number. Let's look at bonds. Oh, who could have seen this coming? Who could have seen this coming? Yep. Let's take a look. See. Oh, 3 point. If it's 3.3, 3.3, really? Really? Huh. Interesting. What about X food and energy? Let's look at it. X food and energy. It's going up. It's going up. Let's look at the futures. We'll see. We'll see. Yeah, let's see what the X food and energy is. This is the number I want to see right here. Right here. This is the number I want to see right here. This number doesn't mean anything. Let's see here. It's stuck. Core is 3.4. Okay, so they are making a progress on inflation. All right, that's good. That's good. That's good. Good, 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 good. They're making progress on inflation. Although I still think the bond market overreacting a little bit, but will be very, very interesting to see. All right. All right. So let's continue. Let's continue what we're doing right now. Yeah, if it's 3.4, that's good. They're making progress. He can come tonight and say, hey, inflation we're improving. Things are moving. We're moving things in the right direction. Things are moving in the right direction. But it doesn't mean they're going to move rates. That's good. That's good. Yeah, it's the timing. All right. So let's talk more about the market. Let's talk about the market. Let's see how Apple's looking right now. Interesting. That's earlier in the morning. We'll see. And let's look at the futures again. We'll see if they start moving pretty soon. Global direction. All right. So let's move back to the market. So momentum to the downside is fair. If you look at the 90-day breakouts, the number says 95. But as I mentioned earlier, when I looked at this, every other thing was an ETF, and that doesn't count. Matter of fact, I'm going to try to find a way to remove ETFs from this to make it even easier. Because look, ETF. There's too many ETFs here. Too many ETFs. So that is a problem. There's not a lot of follow through to the upside. Volatility, let's see what volatility is doing right now. Not really too much. Not really too much. Yeah, Johnny thinks that because inflation's going down, that he's going to get his bike. That's right. That's right. But I don't think that's going to happen. Yeah, Apple's not really reacting yet. Let's see how the market reacts when it opens. And remember, we have a major announcement today. There, let me see if this is. There we go. 3.4. This is better than expected. This is better than expected. Both numbers better than expected. I don't look at month to month. These means nothing to me. I only look at year to year. And this is telling us that things are actually getting a little bit better. So they are making progress. Yeah. It's not great news for gold. No, it's not great news for gold. It may be better news for energy market. That means the economy is picking back up, but it's not that great for the gold market. Let's see what gold is doing here. Yeah, it's still delayed. It's still delayed. All right. and remember, we'll get into the fallout and all of that in the VIP room. So as far as sectors are concerned, we've been basing lately. We haven't been making any major moves, and that's been giving us a really good balance. Let's see if we're out of balance or we're getting into balance, okay? Because the market needs to get into balance to make a move. Semiconductors, technology, QQQ, S&P 500. Look, they're next to each other. Oh my God, I can't believe this. I mean, I'll even accept the S&P being in here. I mean, S&P has a lot of these stocks in them. But the QQQ is made up of technology, communication, and consumer discretionary. They're not out of line with each other. It only took 5 days of the market doing nothing. Look, right here. 5 days of the market doing nothing. So let's continue. So these are in line. Let's see. Blue chip, blue chip, blue chip, blue chip. Semi. You even have the semi-speculative right here. That's okay. I mean, most of these are blue chips. Bitcoin is on its own, but most of these are blue chips, and most of these are tech. We don't have that bad of a we don't have that bad of a fragment. We don't have that bad of a fragmentation. The markets are aligned. The problem is we have a good developed value right now. We need to now make a move. Now, which way we make a move, that's a whole different story. Okay, let's see if the bond markets are still going up or not, and I'll continue. Yeah, somebody spilled something. Somebody spilled something. Look, I smelled a rat. Somebody spilled something. Now, the question is, are we going to get above the year-to-date VWAP, or are we going to stay here? And I think a lot of it has to do with what the Fed says. All right. All right. So again, keep your eye on the bond market. Keep your eye on volatility. As far as levels for the SPY, I don't want to give you levels for the SPY because we're in new high territory, and that's not going to give us any lines. But for the Dow, I can give you lines because the Dow is still very fragmented. All right, so the Dow is, let me put this on here. Okay. So the Dow is up only 0.12% right now, which is nothing. I mean, it's nothing. I like the fact that we're breaking above this level. The next level up is 393.80. And the next level up is 397.73. So we need to break this level and go up to 390, almost 394. And this level is almost at 398. So 394 and 398. And the level to the downside is 38,500. Okay. So keep an eye on those levels. Keep your eye on those levels. Let's see if the QQQ is moving pre-morning. Not a lot. Very, very little. There you could. Not a huge, nothing drastic. Just 0.15 ticks. So we'll see how it goes. Remember, there's not a lot of liquidity right now. Yeah, lower rates is not good for the US dollar. And if it's weaker US dollar, it's good for the energy market and it's good for gold. Let's look at GLD real quick. Let's see. Yep. Okay. All right. So that's moving in the right direction. We may get a little bit upside in the market today. The fact that bonds are above or at the 50-day moving average, that's pretty good. And volatility doesn't seem to be moving higher. All right, let's talk about global economy. We're awaiting the crucial Fed data, which already came out. Apple climbed 7% and was a top gainer on all the three major indices. Today, we're focused on what Mr. Powell's going to say in the afternoon. Yes, bullish sentiment going into FOMC for sure. For sure. According to the media, Bloomberg suggests 41% Plurality of economists anticipate Fed signaling 2 cuts. Closely watch dot plot. I think we're not going to get one till November, my opinion. But there's an 8% chance they're going to cut rates in the end of the meeting in July, which I think is nonsense. But this gives the kid more hope. What happened today gives the kid more hope. This gives him a lot of hope right here because mom is now telling him things are getting better once again. It's very, very interesting, isn't it? Let's continue. 48% chance that it's happening in September. I think there's more of like an 8 to 10% chance it's happening in September, but I wouldn't rule that out completely. I wouldn't. AVGO is coming out with earnings today. The core CPI, which is the only thing that really anybody cares about, is right here. And Powell can come with a straight face and say, yes, we are making progress. We told you it would be sticky, and we told you it wouldn't be every time, but we told you overall, in the big scheme of things, we're making progress. With that said, we're still not ready to take any action, and we still believe that the economy has room to grow because employment report was solid last week. So we're not going to do squat. All right. And but he may start warming folks up to September. That's the best case scenario, and giving that kid a lot more hope. Crude oil inventories are happening today. Matter of fact, let's see what time it's happening. 10:30. So you're going to see a little bump at 10:30. Yeah, the markets are jumping, but let's see what happens. Remember, volume is very low right now, which means it doesn't tend, the moves don't tend to stick. They tend to be bidirectionally. Let's continue. Crude oil inventories. Europe is up a little bit. They're all waiting for today's decision. Bank stocks led gains on Wednesday following 3 sessions of losses. It'll be very interesting to see what happens with financials today in the U.S. China closed higher despite mixed inflation data from the country. Energy stocks led the gains on Wednesday. China's consumer prices rose mildly last month. That's really good. They need that because they're in a deflationary period right now. At the same time, factory orders declined for the 20th consecutive month. They just can't get a break, fueled by concerns over persistent weakness. Also, Bloomberg, which actually is a lot better than CNBC, reported on Tuesday that Biden administration is contemplating additional restrictions on China's access to chip technology utilizing artificial intelligence, particularly focusing on new hardware currently entering the market, raising concerns regarding deteriorating trade relations between the world's largest economies. He's pulling a Trump. Biden is pulling a Trump. Who would have thought? Japan closed lower today as caution prevailed ahead of U.S. inflation data and Fed rate decision. They're all waiting for here to see what happens in U.S. Real estate and brokerage stocks led the decline on Wednesday. Energy stocks outperformed. The rate cut, it depends, Dean. It depends. Overall, it's good. Overall. But we need to make sure that it happens at the right time. If it happens too fast, if we start lowering rates too fast, inflation will creep up. It's one of those things where, let me give you guys a good analogy. You know where you go to a doctor and the doctor says, take this pill for a week and your rash will go away. And you look at the prescription and the prescription says 2 weeks. And you're like, well, doctor, why am I taking it for 2 weeks instead of a week? And he's like, because we want to make sure it doesn't come back. So what the Fed is doing right now, they're seeing that that they're making progress, but they want to make sure that it doesn't. They don't want to, play the we put out the fire here, it starts out here. We put out the fire here, it starts out here. They don't want to do that. So they want to make sure that because inflation is sticky, and it's true. So they want to make sure it really goes away. So they're going to over treat the patient, if you will. No, helicopter gal. I don't think this is that big of a surprise. There you go, Carlos. Anyway, Oracle climbed over 8%. They're doing really well. They announced AI. They announced anything with AI is still, that AI rally just doesn't want to stop, but it will one day. It will one day. So overall, things are stable. Let's look again at the bond market before I go on to the stocks that we're looking at for today. Look at the market. The Nasdaq's up 200 points. Dow's up 240 points. Not bad, right? Not bad at all. All right. Let's Let's continue. Let's continue. By the way, let me look at Netflix. I wanted to take a quick look at Netflix. Ooh, look at that. Netflix is up $5. I like that. I like that. All right, let's now look at our stocks. Now, folks, be careful. A lot of these stocks are going to open with a gap up, okay? So be careful. And market liquidity is not high, so this can really move the market. I'm going to start with my long stocks today, okay? Micron. And look at it. It's already up 2% today. UNG, this is natural gas. Keep an eye on this natural gas ETF, but it has to break the 200-day. If it breaks the 200-day, this thing is in place. So give it just a little bit more. Put an alert at 2155 or something. Oh, early morning, Thomas. Early morning. Tower Semiconductor, a small cap stock that's moving good, real good here. I like this. TSCM, ECL, Ecolab, ISRG, Veco. Thank you, Eric. I appreciate that. Veco, ONON. I gave you guys this stock a few times. Look at that. We got over 400 folks in here. Love it. Love it. Love it. Welcome, welcome, welcome. 4 is the next one. Arthur says, what do you mean Biden pulling a Trump? What was I talking about? Tough on China. Tough on China semiconductors. Remember, everybody thought when Biden was getting elected that he was going to be really, really easy on China and chips. No, he hasn't been. It's a big surprise for me. Shift. This stock is starting to come up. It just finished this gap right here. It looks like it's coming back up. Yeah. So no one thought he would be tough on China chip stocks, but he's been really tough on it. So I say he pulled it. He's pulling a Trump. Look at this stock in Terra. We've mentioned it a few times here. Kodak. Remember Eastman Kodak? Eastman Chemical Company now starting to come back. I remember T-Buzz was really excited about this stock. Look at that. Up nicely. Let's look at SMH. Let's see how chips are doing right now. Nice. Look at that. Up 2%. Woo. Gonna have a nice opening this morning. Be able to take some profit targets off the table. This is good for Bitcoin. This is good for all tech. Lower rates are good for that's it for the upside. Let me now give you the downside. PB, TVA, Corteva. Wait for it. Wait for this. Wait for it to break and go into the gap. Wait for this. Wait for it to break. We've mentioned this stock a few times. Arthur, do you believe everything that Trump says? I mean, do you believe everything Trump says? And I don't care who you're voting for. Do you really believe what a politician says? The stock market doubled since Biden's been in the White House. You guys know that, right? The stock market has doubled since Biden been in the White House. I'm just, yeah, I'm telling you, stop bringing politics into the market. Look, let me ask you guys, am I one of the best traders you've ever seen in the world? I don't use politics in my analysis. You don't need politics in your analysis. It's not going to help you. I promise. It'll only hurt you. It'll distort you. I know men and women who have given up gains and lost the opportunity to pocket huge money because they thought politics were going to somehow intervene, and they don't. Yeah. Just FYI, you guys do know that the market doubled since Biden's been in the White House. I'm just FYI, and that's just a fact. Dollar Tree. Northman. NOC. Well, I don't use politics. Politics have zero to do with my analysis. Zero to do with my analysis. Oops. Bam. Exactly. Exactly. Stock market does go up in Democrats just as much as folks. If you think okay, here's what I'm going to say. T-Buzz is more into politics than anybody I know. And he's a huge Trump fan. Is it helping him? How is it helping him? I do know people who completely missed out on a huge move in the Russell 2000 going into the debates last election because the debates showed. So let me back off right now. Let me back off. Okay. I'm going to give you guys a real example. The last presidential cycle, I'm just going to leave it here because we're almost done. I'm going to leave it here because I'm going to teach you guys a really good lesson. Okay. The last presidential cycle, everyone thought that Trump was going to be really firm on China and Biden was going to be very, very soft on China. After the first presidential debates, the Russell 2000 stocks started doing this. They started outperforming all the markets because they were anticipating Biden to win. I don't know why, and I don't care, and I'm not getting into it. And I kept telling everybody, hey, guys, small caps, which have the most sensitivity to China, are starting to go up. The market thinks that Biden is going to be soft on China. Everybody kept telling me that I was crazy. And everybody said, oh, you don't know what you're talking about. Trump is going to win. And I said, guys, the Russell's going up. The Russell is favoring, because at that time, we didn't think that Biden was going to be tough on China. We thought he was going to be really soft on China. So the market took that and went with it. If I had been political, I would have completely missed that move. Okay? I would have completely missed that move. You don't want to miss moves because you think some politician is going to be elected sometime in the future. Okay? And by the way, they're all full of shit. Okay? Sorry. Here's another stock to the short side. I would short it up to the 200-day moving average. Politics and me don't get along. We're not good friends. When I hear political discussions, I roll my eyes and I leave the room. The reason I'll show you why I skipped the QQQ levels right now. By the way, for the record, I've told you to short this stock right here, right here, right here, right here, right there, and right there. And then Builder. So I think the stock can go up a little bit and then start coming down. Be careful. Watch your trades today because we obviously have some upside. Let's look again at the bond market, okay? It's still holding on pretty good, but we'll have to see what happens when the market opens. So far, futures are really, really strong. I mean, we're up way beyond random. 200 points on the Dow, that's way beyond random, and 150 points is way beyond random. When am I going to be talking about the summer program? Hey, Wayne, what summer program? Can you be a little more specific? You're not out of line at all. I just don't know what program you're talking about. Send me an email. Send me an email so I know what you're talking about. But so far, we're looking pretty good. I'm looking for a firm opening. Now, why did I not talk about QQQ levels? I'll show you why. Look, I have a good reason. So here's my lines. Here. How do you want me to draw lines when we're above all my lines and making new highs? Let's look at real time. My lines are down here. I can't make new lines until we start cooling off. When you have new lines, it's very it's very, very hard for this to rally. Arthur, what are you asking? Really? Wow, I don't know what you're talking about. If you tell me what you're getting excited about, Arthur, or reacting to, I can comment, but I can't comment when you say really wow. Yeah, bank stocks should be moving today. Chip stocks should be moving today. We should have a pretty healthy market today, unless something really drastic happens, because this means that inflation is getting better. So this is good for the economy. This is good for everybody, assuming it's for the right reason. Uber, yeah, I could take a quick look at Uber, although I would imagine every stock is up right now pretty good. Yeah, I mean, it's looking good. I like Uber. I don't know what lines we're at. Let's see real quick here. So we need to pass this level right here. We need to pass the 100-day moving average. Yeah, Arthur, if I said something that surprised you, send me an email, roger@rogerscott.com. I don't use Fibonacci. I've never met a professional trader that traded for a living or even remotely that used Fibonacci. That whole Fibonacci to me is a joke. I use actual levels of commitment. All right. So yeah, Arthur, let me know what it is that you're at. Here's my email address for anybody that wants it. Arthur, I don't know what you're reacting to, but I'm very curious. So let me know what you're reacting to, and I'll respond to you, or I'll bring it up here tomorrow. And then watch the market closely. Don't trade before 10:30 today. We may pull back. We're going to open with a nice big juicy gap. To the upside. So let's see if this gap, we're going to open up around here somewhere probably. So let's see if this gap holds or not. Yeah, it's all hocus pocus. Yeah. All right, guys, I got to get out of here. I got to go to the office so I can actually give you guys some trades and earn my keep around here. If you guys enjoyed this, give me a thumbs up. Thank you for bringing over 400 people here today. Remember, customer service live from 10 to 1 p.m. And folks, remember something. I've got a strategy that has almost a 94% win rate. Okay. I highly recommend you guys check it out. It's happening at 1 p.m. It's about finding good stocks that gap down or finding good stocks that gapped up that are ready to sell off. We're going to probably find some good gaps to the downside next couple of days. Apple, yeah, I could show you Apple. I mean, Apple moved quite a bit yesterday. It's down. And by the way, we put on a spread in the members area yesterday. The spread is to take advantage of movement, not one way or another. It's designed to take advantage of Apple one way or another. That's why it's called a straddle. And that's why it's not called a long call or a short put. I don't care if Apple goes up or down. I just want to see Apple move. I don't know what will happen tomorrow, but I will have a better idea today after the Fed announcement. Thank you, everybody. Have a fantastic day. If there's something that I did not... Jim says everybody who took the day trader boot camp understands the market. I took your strangle yesterday, almost cashed out of closing, but held overnight. Good. You guys let me know how you did, and I'll talk to you guys later. If anybody has any additional questions, please let me know. I'm headed to work, so I could be there at the open. Thank you, guys. I love you all, and I appreciate you all. Bye. I really do appreciate all of you. Thank you so much for being here.